Real quick before we get into the prediction, for those of you that are new to the channel, the main goal of the channel, guys, is to bring some goodwill to the world from a place that's notoriously, bad-willed, if you will. Not everything in the stock market is bad, but let's just go ahead and say that the majority of what's done with the money from the stock market could be used for better things. So we're looking to help do that. And the way that you do that, guys, and help support the channel as well as by following the rule of karma. It's the unwritten rule of the channel. You do so here at the resources tab of our website. 5% of the profits you make from the information on this channel should be donated back to one of these charities, or I should say forward to one of these charities. You're paying it forward to the universe, saying to the universe, thank you, I see more coming. This is the goodwill gift to the world, and you continue the flow coming. Not only that, but you perpetuate more good deeds throughout multi-dimensions. And then 5% of the profits back to the channel. That's what keeps the channel going. Cash App, PayPal, either of those works. It leaves you with 90% of the money that you wouldn't have made without the information to begin with. So make sure you spend that money out of love. The universe will send it back to you tenfold in all directions. I also just want to do a shout out to Robert Lelis. He sponsored the public version of this by purchasing the paid version of the 2023 reading for ALI. The way that you could sponsor a 1 year, guys, is by going to the Eso-Meta forecast tab under our services, right? Click on that. 1 year prediction, click on here. And then you specify the year 2023, 2024. And put in whatever ticker it is that you're interested in. This is a great way for you to get a lesser known ticker or a lesser known crypto onto the channel's content. And it's a great way to support the channel. We definitely remember everybody that does this because it really helps out the channel. Thanks again, Robert. All right, guys, with that said, let's get into the prediction. This is the ALI 1 year overview reading for the year 2023. It's currently March 28, 2023, 10:57 p.m. Eastern Time. ALI at the time of this reading is currently 0.03747, so just over 3 cents per coin. And the shuffle file we're about to play was created on March 26, 2023 at 6:24 p.m. Eastern Time. That's this file here. So the overall theme of behavior for ALI in the year 2023, we have 3 pokes through the same price level, followed by a sharp decline off of the third poke. It's crossed with bullish price swings. So when you get into a larger time frame for the representation of one card, so like what I'm trying to say here is the sorrow card, when representing a day, is likely going to yield a much different kind of, well, maybe not much different, but it's going to yield a different kind of circumstances when it's the same card representing a whole year. So with that said, it may not be the same price level that we poked through 3 times. It may be the same resistance level, and I specify that because it might be at an angle, sometimes on a larger time frame scale. That's what happens with the sorrow card. Behavior around the highest high. So when we're looking to determine in real time on a chart if we've met the highest high, one of the criteria that we'll be looking for is a fast, sudden move higher into that highest high price level. Behavior around the lowest low, we will first establish support along a key support level. Rotating sideways along a key support level will establish support. That's support on a 1 year kind of scale. And then there'll be a fast or a notable move to the upside that'll stand out on a 1 year chart kind of scale, followed by the establishment of support at a higher level with some rotation sideways along that support. So it's kind of like a horizontal, vertical, horizontal kind of chart behavior. And that's what we'll be looking for as criteria in real time when we're looking to determine if we met the lowest low. Before we go any further, since we did this reading in March of the same year, let's go check out January and February and see how we've done so far. It's a good way to kind of like get a good gauge of if the rest of the reading is accurate or not. And it looks to me like it probably is pretty accurate. So we have a lowest low here in March. We haven't quite met the lowest low just yet. But with the 1 year readings, you have to give them about 2 weeks wiggle room. So we could still see some more decline here into the end of March where we see a lowest low. It's a lot of the Ace of Cups also indicates a lowest low. And out of February, we had this would be the first poke here in February. It looks like It ended up being in early February. We have a correlation in late February. Like I said, about 2 weeks wiggle room. So here's the first poke. So we have an idea of where the price level will be for the second poke. Second poke being April, May. Before we get into that, let's check the rest of this. So the February high was a brief peak that's easily missed, followed by a decline through multiple support levels. That looks pretty solid. And it looks like the January high, or the February high and the January high really could have been like, it's kind of like on the cusp. It could have really been like a combo here, because the January high, we also have like this rally into key resistance, followed by a decline with consecutively lower spikes up on the way down, and we see this rally into resistance with consecutively lower spikes up. So you can see we're a little behind schedule. End of February, what we should see is this sideways fluctuating decline that precedes a rally. So we should see a lowest low relatively soon, probably. We'll either see a lowest low or we'll come close to a lowest low, but I'm advised to be cautious there. Multiple false bottoms. And then in March, we have this failed attempt to break through key resistance, followed by a decline through key support. And the low for the month of February. The low for the month of February happened when we had, within close proximity to this move higher through resistance, we stay above it briefly and we break back down through the same price level. That's all looking pretty solid. Early February, we established support. Yeah, I like it. It's pretty solid. So with that said, what we're probably looking at now, guys, is we're still in decline mode, and we're looking for a lowest low or close to a lowest low, and then we should have some bullish behavior out of that lowest low, bumping along resistance, maybe breaking through resistance, bumping along resistance again, and it'll bring us into a high that is likely on the cusp of April, May, where we poke through that same price level again. That's what the orange correlation is here. The orange correlation here in May and April, which is, and seeing it in both is what leads me to believe that it's probably on the cusp. This stone also indicates a highest high in a lot of cases, so we probably see a highest high, it looks like probably in May. Excuse me, not a highest high, but like a second poke through resistance. We see a highest high at the end of the year, I should be clear, in October, November, where we poke through resistance or through that same price level one more time. But it almost appears as though we're going to push the upper end of the range higher, at least temporarily, before a sharp decline, which is what that universal hexagram is indicating. So everything's kind of working in tandem with the theme card. We have one poke here in February, well, it ended up being January, February. We have another poke here around April, May, and then we have another poke here, followed by a sharp decline off of the third poke here in October, November. That's pretty solid, and we should see some bullish price swings in between. Right? Looks like we have a lowest low here after one of the pokes. There's a lowest low, followed by another poke. So that's pretty price swingy, if you ask me. This is pretty solid so far. Okay, so in April, we have probably the end of April, we have a poke through the same price level shortly thereafter. In early April, off of a crest or peak, there's a sharp decline, like the first week of April. And remember, you got to give it about 2 weeks wiggle room. Follow the sequence of events for accuracy's sake. Off of the high, of the April high, which will be in close time proximity to the April low, or excuse me, to a prominent low for the year. There's a period of volatility near that April high, and a sharp drop out of that high that stands out on a multi-day chart. The low that we see in April will be higher than the low that we see in May. It's possible that we see the lowest low again in May. Alright, so I'm going to mark up, that way when I review, I've got it telling me exactly what I said. Alright, so we're looking for possibility of another lowest low in here on the cusp of May, June. Might even be July. Hard to say, but there's a possibility of another lowest low here. May, June, probably. All right, so in April, at the end of April, we have selling from a support level down to and through support to meet a second support. We bounce around that support sideways for a bit, and then break down through multiple supports into a month's low. It's also possible we have a highest high here. I mean, it would be a high, like close to a highest high, not necessarily the highest high, but it'll be close. This is like almost like a highest high here, made, because the highest high isn't going to be much further above where we poke through the price level the first two times. Is my point. In May, we have sideways rotation along key support on a multi-day chart. We rise to meet the nearest resistance, and then we fall back down and continue rotating sideways along that key support. That's early May. Important price level highlighted near the May low. Also, there's a decline off of the May high, which is a prominent crest or peak for the year. There's a decline off of it that offers an opportunity to open up a long position, meaning that we should see that high at least one more time or higher. And that looks to be what's going to take place here in October, November. With that said, towards the end of the month of May, there's a rally that offers an opportunity to open up a short position. It looks like a rally out of a prominent trough. So we go from a prominent crest to a prominent trough on the scale of a one-year chart. So out of that trough, rally that offers an opportunity to open up a short position. And it looks like creates a crest somewhere on the cusp of May, June. And we sell down to and through support to make a U-shaped reversal below that support and come back and reuse it as support. It gets a little choppy in here. There's a holding pattern near the high for the month of June where we should have a pop and drop. Late June, we decline to and through support, meet a second support, and we rotate sideways along that support. And the low for the month of June is in close time proximity to a prominent high for the year. And also, we will be rallying. It forms when we rally along our diagonal trend line, and then that ends with a fast sudden move higher, and then a breakdown through that diagonal trend line with increasing volatility on the way down. Yeah, okay, so I see what's happening. So this is going to be like... How do I... So it looks like there's probably a lower low in July than there is in June, actually. So we have a lowest low in, somewhere towards the end of May, probably based on where the chart is now. And then we probably see it again somewhere between the beginning of June and the end of June, somewhere in there on one of the cusps. And it takes place after the second poke through price level that we should see around the cusp of April, May. It does appear that there's a lower price level here, though. Interesting. We may see the lowest low twice. I mean, like whatever the low ends up being around here in June, we might see it twice, like a little bit of a pop and then back down to a low. Because it looks like we probably see it here in July as well. In July, there's a rally in early July. The July high and low are within close time proximity to each other. From the July high, we decline. Probably the second week of the month of July, we decline to a support level, a key support level that we recently visited once before. That's what I'm talking about. There's like a pop and then another drop, and we should see that low. It might be a lowest low, or it might come close to a lowest low, but whatever the low is that we see over here, we should see it again here towards the end of July, after a decline that increases with the momentum moving forward in time. Probably a pretty big price swing in here. There's a pretty big price swing involved in the low, in a support level, a price swing around a key support level on a year-to-date chart around the low for July. There's a pretty significant price swing on the scale of a one-year chart. August. So in August we have a decline along a diagonal trend line, increasing with momentum moving forward into a prominent trough for the month, or moving forward in time into the low for the month, where we have a key price level that will act as a good mean point for like between a bullish and a bearish position. That price level around the August low is a good mean point. So the August low is going to be higher than the July low and the June low, just to be clear. Behavior, there should be a significant move on a multi-day chart in probably the beginning of the third week of August, taking us to a prominent crest or peak. Let me mark that off. Sideways S formation, we likely see the high. Okay, yeah, so we see the high again. Whatever the prominent crest or peak for August ends up being, we see it again in September, towards like the beginning of the fourth week of September. In between, we have some sideways rotational and key support in the end of August, increasing in volatility as we move forward in time. Looks like increasingly bullish momentum as we exit the month of August. Probably even into early September, but in early September we sell from we successfully turn resistance into support somewhere around the cusp of August, September, but then from that support, that successful support, we then decline through multiple support levels in early September. There's an unexpected move to the upside out of the low, the September low, and bearish price swings in the end of September. Right, so we see it twice in like the peak or crest. We see it there in third week of August, and then like the beginning of the fourth week of September. And in between, there's a notable decline and then sideways rotation, increasing with bullish momentum as we move forward into the second peak, followed by a bearish price swing and a sharp decline through multiple support levels, taking us into like a prominent trough on the cusp of September, October, out of which there's a rally in early October, taking us to a highest high for the year. We probably see the highest price level not far from what we've already seen, but a highest price level here in late October, early November. Probably early November. There's a key support level around the low of October, which offers a trade opportunity. I'm going to get into the trade opportunities at the end of this video. Notable reversal around the high there. Okay, so we rally into a highest high on the cusp of October, November. matter of fact, we rally into like a peak or crest in the end of October. There's a decline into early November, and then out of that decline in like the second week of November, there's a move from the bottom of a range all the way to the top of a range, bringing us to the highest high there again. We push the upper end of a range higher, at least temporarily, in the midst of a rally that increases with momentum moving forward in time. Notable price swing near the low and the support level here in October. There may be some relationship between July's low and October's low as well. That could be the same support level that's highlighted. And then another significant price swing near a crest or peak on the cusp of November, December, with a U-shaped dip around the December high. A notable decline to the December low that'd stand out on a year-to-date chart. It looks like the December low is definitively lower than the November low. Excuse me. And then out of that decline that takes us to the December low, there's almost irrational move to the upside in late December, reaching for a distant resistance level. 2024, we have continued rally along diagonal trend line, breaking through horizontal resistance. They meet a second resistance and then pulling back to somewhere between those two price levels. How does that fit into the grand scheme of things? We'll check that out after we get into the best paid trades that we see here.